Welcome to TradeTheMBI.com. This is Sean. This report is for the 18th of January, post-holiday. Not a whole lot happened. Of course, during the holiday, there was no trade, and yesterday was equally just as modest from that standpoint. The futures, because obviously in the European side of it, you're able to trade for a little bit, and so it still creates range, but still stuck at this 4,008 range. We're at 4,018 change, plus or minus either side of that line. MBI Magenta is still riding high, so none of that's changed. What we have seen change here is significant increase of short interest here with the DOC cyan splitting away dramatically from the green. That does suggest weakness, particularly if you get a breakdown of that magenta. Without that breakdown of magenta, though, I think that we're just going to continue to slide back and forth. But we'll see how that one develops. Of course, from the NQ standpoint, similar situation developing. Shakeout's still rising, though. I mean, all this is very strong from a bullish standpoint. There's just no indication. And frankly, I think that with as pessimistic as everyone has been, the upside trade is the counter trade, and I think it's thrown a lot of people for the loop. I don't know why. It doesn't really have much to do with what you see in the current economic readings. It's the perception of how things are going to go, and the perception is the Fed must weaken, and there you have it. I mean, it's not what's happening, but that's what everyone believes will happen, and that's why rates have fallen, and they will continue to do so as long as the expectation is that the economy is going to falter. The big surprise comes if that doesn't exactly happen, and that is really the interesting one. Um, Oil back over the 80s. Again, this is an indication that inflation, while lovely, isn't that beautiful? And this is exactly what I deal with sometimes with TradeStation. But oil's continued rise is not that surprising. You've got a lot of conflicting data points coming through there on crude buildups versus individual supplies, and it seems like Russian oil somehow is making it to uh, U.S. filling up the gap. But is that stable? And is there any justification for a lower side trade? I don't know. From a gold standpoint, it's going to continue to rise. I mean, we're already back up to 19. That's been the big mover of the year so far. No question about that. And with that reset, Euro, a little bit of softness as the ECB says they don't have to increase their rates as much because things are going so well. And therefore, the euro is fantastic. I know it's a bit of hyperbole, but needless to say, significant that still above that well, almost 108 range, which that's a huge move given how really ugly things were for the euro. They still are. Nothing's changed from that standpoint. Bitcoin on that explosion, people are now going to get excited again about it, and they're going to forget everything that happened from before. But we can see this. This is similar to what we could see for the market. This uber pessimism gets overtaken, and in this case, it was pretty clear down at the bottom when we started basing here lower. There really wasn't that much downside risk left in it, given that all the worst had been known about everything, and then it was just a question of what would be the catalyst. And in my view, when we saw this consolidation, the catalyst was going to be that any new buyers into Bitcoin weren't going to find them because all of the weak hands were gone. And sure enough, we got the buy signal start of the year, and did pretty well. ETH doing almost identical. All positive extremes, so keep that one in mind. It will get revisited, and yes, it's not going to pop up just yet. So there you have it. That'll be the long and the short of it for now. As always, though, trade well. We'll talk again later.